Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Sunday, February the 24th, the year 2019. Let's talk trading, weekly open and gap. Before we get into it, just a reminder, starting off the week right, money and risk management. You must deploy it on each and every trade. Okay, looking at the week. You can see we've already filled the gap here on the euro yen, but we still have 1, 2, 3, 4, 5, 6, 7 pairs with that gap waiting to be filled. Last week we had 2 pairs that didn't fill, but hey, 2 out of what, 20 something isn't bad. We know that's a statistically probable trade, also known as easy money, right? Looking where we sit for the year, you can see we opened below the yearly open, but hey, price pushed right back up. See, we tested the previous day's high right there. So right now we're green for the day, the week, the month, and the year. That's on the euro yen, of course. But you see, I just do one pair. Part of the reason is to show traders that you don't have to hop from pair to pair. You can just sit and wait patiently, and your trades will appear. Okay, you can see the high for the day, the high for the week, the high for the month, low for the week, low for the month. Actually, that's a low for the day, which is also low for the week, low for the month. So you can see where price is. And you can see over the past 1, 2, 3, now 4 days where price is just ranging right here. We're seem to be staying above, closing above the opening day for the year, but not seeming, we only closed above the high for the opening day of the year one time, poked its head above it a few times. So pretty much we seem to be range bound between, say, 125.40 and what, 125.80 or so. Once again, above the opening day for January and February, but still within the range of the opening day of January and February. That breakout should be huge. Now, this is interesting. We had a inside bar Friday, inside bar Thursday. So we had back-to-back inside bars on the daily. And you see here, price is already poked out of either side once today, but we moved right back inside. Now, 2 weeks ago, we had an inside bar on the weekly, and 3 months ago on the monthly. And you can see where all those inside bar levels are. So really, looks like we're mostly concerned with the inside bar of the week. See, we crossed above that high, and then the inside bar from Friday. And looking at the daily chart, you can see we started out in the wick zone. We exited for about 3 pips, turned right around, exited the upper one by about 2 pips, and you can see we're in the upper wick zone. Only 44 pip range, no range over 100. It's just the opening day of the week, so not much. We've already got our highest open, H1 highest open, H1 lowest open, and you can see prices just going back and forth in between. Now you notice there was an opportunity here to pick up off of that lowest open, lowest H1 open. Buy zone, pivot above the buy zone here. So we definitely had a long bias. So right there was a there was a trade once. Second trade, you can see not so many, almost just a few pips or a scratch, unless you're riding it out to see what happens. Okay, rat zone's in play. We're at 43 pips, but not much. But you can see here a nice little rat reversal here. And off the top here, another nice rat reversal for the red rats. So rats have been fed today. Once again, we took out that pivot. We got a weekly pivot of 125.34. And we haven't quite hit it. Got close, but not quite. Okay, so you see here we've got 2 missed pivots from January, and so far 2 missed pivots in February. And we've only got, what, 4 trading days left in February? So I'd be thinking about watching this pivot getting taken out. I would be shorting any highs, trying to maybe get back to that pivot. And of course, if it comes around, just trade the wick zones. You can trade out, take the profit when it presents itself. And here we go, showing right here, 2 ball at the bottom, pro trade green at the line, 3 ball at the top, red at the line. Oh, and there was a trader that wants me to, in the 3-level modified version, I guess he likes the fib levels, and he wants me to add a couple of more fib levels. He wants 90 and 10. Not really sure why, but if I get time, I might do that. It shouldn't be a hard modification. But, you know, I try to help traders out when I can. And in and out of the wick zone, we're back in the wick zone. And one of my favorite trading charts, you see here, long trigger, went up, came back down. That was a nice trade. Right here, you get a short trigger. Actually failing to maintain that was also a short, because all you have to do, you can drop down right here, or even go to M5 if you like. And you can see the price action around that line. So, I mean, take it any way you want right there. It, you know, failed to hold that line right there, cut through that wick, short at the line, and the rest is history. As you can see, not much happening. It's Sunday night here. And when I opened the screen, there was a, you know, there's a trade, here's a trade, here's a trade. You can see a lot of waffling, but finally gave up profit here in, and you can see here another chance, gave up some profit there. Maybe you could call that here. You can see it's starting to, you know, range again, but finally broke out. Once again, giving up profit. So you can see here, I mean, you know, if you're going to trade this type of trade, you just take what you can get. Somebody was saying that they're worried about risk return, risk reward. You know, what if you make 2 pips and then they have a 10 pip stop loss? As I said, you know, you have to protect your profit. If you're up 7 pips for the day and you're in a trade and it's going against you, you can scratch that trade. There's no reason that says you have to stay in that trade. That's part of the money management. I mean, when you think about it, sure, you've got your trades, you've got your targets, you know, your trading plan, you set your stop loss, you set your TP. But you also have to manage the money. And if you're up for the day, the idea is to finish with more money than you started with, right? So there's no reason to give it back if a trade's going against you. You see the trade going against you and you just sit there and give back your profit? No, exit the trade. You see, a lot of times traders trade each trade in isolation. In other words, they don't think about how that trade relates to all the other trades. So once again, if you've got 7 small winners, 1 or 2 pip wins because the market is just churning, and you're up, like I said, 7 pips or so, 14 pips. Don't let a trade hit the stop loss. Oh, sure, it could almost hit the stop loss, turn and go, but you don't have a crystal ball. I don't have a crystal ball. You got to manage the money. In fact, maybe I should do just a video just talking about managing the money, but I'm talking about it now. So you don't trade in a vacuum. Don't trade each trade discreetly per se. Think about how it's going to affect your portfolio, how it's going to affect your results for the day. And the question is, why give it back? You see, you just can't adhere to these strict rules all the time. If you want to adhere to strict rules, then write an EA or something and let the EA go. But it's going to probably lose, and that's why we have to have some discretion. We have to have some intelligence, in our trading. And part of it is portfolio management or money management. If you're up a certain profit target for the day, shut it down. You did what you were supposed to do. There's no reason to give it back. Market's going to be here tomorrow, and then you can sit there and you can take the best trades. Because usually what happens is, if you say you're up 7 and then you lose 10, now you're down 3. Now, chances are you're going to try and get that money back. And rather than wait for the trade, you're going to force a trade. And first you're down 3, then you're down 6, then you're down 12. And it's just a downward spiral. So if you see a trade going against you and it's taking your profit, scratch the trade. You can re-enter at a later time. And if it just so happens, just as you exit, it turns around and runs to the moon, oh well, that's trading. That's just the way it works out. It happens to all of us, right? I mean, it's like they have eyes. It's like they're watching my little account. There's trillions of dollars out there, but they're watching my little account and they want to take away my pips. It's just like, no, that's not the way it works. So, part of trading like a pro is having a realistic, view of the market, its participants, and what's happening. Because really, the market doesn't give a rat's what about you or me. We're too small, We're just, we don't even appear on their radar. That's how insignificant we are. So just remember that when you're trading, and use some money sense. I won't say common sense, just use some money sense. Just don't give it back if you're up, Protect that profit once you get it. So, fellow traders, there's your weekly opening gap. There's still some gaps out there waiting to be filled. So if you don't take advantage of them, don't say I didn't give you the heads up. And just remember, as you're trading, it's not what you trade, it's how you trade it. So get out there and drain the banks like a pro.